Hello, everyone. I think we're live now. Welcome to the Decentralized Mic. In this show, we spotlight the builders, thinkers, and bold projects shaping the future of Web3 and beyond. I'm Nico Arevalo, co-founder of Velocity Labs, a core contributor to the Polkadot ecosystem. And today's episode is actually a very timely one. We're doing a deep dive into one of the most practical and probably fast-growing use cases in crypto, which is stablecoins. What started as a tool for traders has now become a foundation for global payments. Currently, with around 30 trillion in annual transfer volumes, stablecoins are outpacing Visa and Mastercard combined. But what's actually driving this usage? Who's actually adopting stablecoins, and what are some of the frictions that still exist in this subvertical to have skate velocity? We brought together three leaders building the rails behind this new financial future. So, over the next hour, the idea here is to explore how stablecoins are powering remittances, e commerce, traditional finance, while also navigating the regulation, the trust, and actually the promise of a multi chain future for these instruments. And of course, we also want to hear from you. So, drop your questions in the live chat, and we'll bring a few of them in the QA session later on. So, to kick this off, let's start with some intros from our panelists. So, please give a short intro on yourself, who you are and what you're working in, and then just give a short blurb on how you got into Web3. Maybe you can start with Mark.
Yeah. So hi everyone, Mark Daly, Chief Business Officer at Zero Hash, and Nico, thanks for having me. It's great to join you all today. For those that don't know Zero Hash, we've been building in this space since 2017, and today we power stablecoin infrastructure for major financial platforms. Groups like Shift4, Kalshi, Stripe, Remote.com, and Franklin Templeton are leveraging our APIs and SDKs to launch stablecoin products. And our goal as a company is to abstract the technical and regulatory complexity in doing that and launch those products to market. So whether that's for payments, funding, or tokenization payment rails. How did I end up in Web3? I guess back in like 2016, probably at like the early stage, I very much saw that from traditional finance, there was massive like inefficiencies across the board. And, crypto at the time really just offered like a gateway into that marketplace and a technology that could be leveraged to make things faster, cheaper, more transparent for users and more accessible. So that was my sort of gateway into this whole space.
Nice, Mark. Thanks for being here with us, and thanks for sharing that. Nass, you want to go next?
I made it. Hey everyone,
mute.
I'm Nass, founder and CEO at Bastion. I've been in the crypto space for quite a bit of time. Previously was already working on key management at Apple and Docker, which runs the majority of the kind of cloud workloads worldwide, and really came to the space on the key management side. I've been essentially building on the regulated financial services in like infrastructure side for quite a bit of time in the space. So Bastion is essentially crypto and stablecoin as a service. We have sets of APIs and tooling that enable companies and large enterprises and institutions to issue stablecoins, custody stablecoins, and digital assets, and then just move them around globally. Very interestingly, kind of like have seen this problem firsthand from within the large enterprise. I created the wallet infrastructure at Novi at Meta for the Libra project, and essentially saw these exact problems of issuing, kind of like a large scale stable asset, having to custody it, having to build the on and off ramps, and so on. And so really wish that I had a partner like Bastion. So decided essentially to build what I wish I had access to at the time, and spent also time at A16Z Crypto as Chief Information Security Officer.
Thank you, Nass. What got you into the Web3 space? I think you We missed that part as well.
Yeah, I mean, like I was already working on the key management side. I think that trust management is probably the single most important problem to solve, in the world, because trust management applies to everything, ranging from money, services, coordination. Like really, it's a building block for pretty much everything that we do as like humans on a daily basis. And so solving that, I really saw blockchains as the perfect trust management machine, and building those systems, making them accessible, not just for money, but really all the use cases, which is why I think I'm very excited, not just about money, but also NFTs and other things that the technology really unlocks at a global scale. So really coming from the trust management and security side, I would say.
Awesome. That's super interesting. Nico, we'll go over to you.
Hey everyone, I'm Nico. I have been working in Ripio for about 3 years as product owner, leading different products in the ecosystem. The Ripio card, for example, and some stablecoins experiences or related products. I have been in crypto since 2017. It's actually a really good place to be here because in Latin America, as you know, crypto is a tool that basically helps people in a system, in a financial system that works against the user in different ways. So here at Ripio and also the entire Web3 space helps people and to save money and to spend money and to just survive. So yeah, that's pretty much what drives me into Web3 and crypto overall.
Awesome. Thanks everyone for the intros. And as you can see, we got a very diverse panel. I think we're basically covering all layers of the stablecoin stack, from blockchains, ledgers, issuance, custody, liquidity services, use cases, and end user applications. So I think we're going to have a very diverse set of views in the industry. So to get us started, let's start very broad. And what excites you about stablecoins right now? And maybe you can start the other way around, Nico, sending it over to you again. What excites you about stablecoins?
I think it's similar to what I said. I think in LATAM, there is a necessity for the people to fight against some specific financial issues that we have, like inflation. So running away from local currencies in some places, or to be able to join some payment rate runway through stablecoins like a crypto card, or just paying from your cell phone to a commerce, something like that. It's really useful. I'm from Argentina, and in Argentina we had like 50% inflation a year, with months like 30% inflation in a month. And also there is a big portion of the population that works in like not legal jobs. So having like a way to onboard those people into the financial system and be able to save money or have their account somewhere with stable coins, it's a really useful thing for them. So I think that's pretty much it. We are trying to help people. Yeah.
What about you, Nass? What excites you about stablecoins in the current landscape?
Yeah, it's really interesting, because the way I've conceptualized it is that you tend to associate a discount for money that is hard to spend, and then you apply a premium on the one that you can spend more, which is why you would take the trade if I give you a digital dollar in exchange for a physical one, right? And you will really be reluctant to go to an ATM by default to get your physical cash. And the way I think about it is that stablecoins are essentially the next iteration of the form of money that will increase spendability and reach. I think that we went from physical cash essentially to digital money, which was great in many ways, but I do feel like there were just so many things that were limiting about the money that we have access to currently, especially the dollar is a network, and having the ability to expand the network actually brings an amazing range of network effects, including liquidity, spendability. I can buy more products more broadly. I can send money to various people. I can also build systems that leverage the programmability of it for more use cases. And so this is really, I think that stablecoins are going to be inherently way more valuable for the same amount of backing in actual dollars. Is actually going to be more valuable to people because it is more spendable, it is more programmable and more usable, and it's just safer.
Yeah, it's kind of going to increase the velocity of money drastically, and that's actually correlated with economic growth, which is a big driver of humanity. Mark,
and it's even safer actually from like a couple of the backing standpoint, right? If you think about fractional reserve banking versus having money market fund, it is actually even safer form of money at the end of the day. So yeah, for all of these reasons, for sure.
Agreed. Mark, what about you? What excites you about stablecoins?
Yeah, I think, you know, maybe just speaking from like my position and role, I get to work with a lot of great companies every single day that are looking to launch products in this market. And I think the one thing that really, you know, excites me about this year and even tail end of last year is just the velocity of players that are entering this space right now that are set on launching products and that cover sort of the entire value chain of the payment system today. So that's what really excites me right now, is just the velocity of new platforms that are coming to launch products that maybe you wouldn't have thought would be in this space a year ago, but right now are looking to launch in the next couple of months and go live and bring stablecoins sort of to that mass level of adoption.
That kind of leads us into our next point, which are what's enabling this growth. Because if we look back in like the history of stablecoins, and if someone has the specific data, keep me honest, but I think it was probably USDT, first form of stablecoin, or maybe DAI, first form of stablecoin, probably like 2016, 2017, right? Why are we just seeing kind of this sort of exponential growth and adoption? And Mark, maybe you have a very interesting take, given you mentioned Zero Hash from 2017. What do you think kind of changed in recent times?
Yeah, it's funny, when we started first, I think Circle was an OTC desk that sort of predates USDC, and I think maybe one of the things that we've seen happen over the past couple of years, I think this year, first of all, the regulatory movements, frameworks like Genius and MiCA have definitely helped just give that level of clarity that people need before they can launch these products like traditional payment players. But I think on top of that, and we've got Nico from Ripio here, I think you've just seen a huge adoption level with major fintechs globally, where we now have hundreds of millions of users that are plugged into this system to have easy access to stablecoins. If they're using Ripio and they want to spend that with their debit card, or if they're on Revolut or PayPal, whatever it is, you've just got this mass adoption level of stablecoins across the board where it's just easy access for that end customer. So I think there's two things building on that there. And certainly Circle's IPO doesn't hurt either for people wanting to get more active in this space. But I think there's those first two are probably the real sort of like drivers right now that I see across the market.
Awesome. And bringing it back to Nass. So I mentioned kind of the early days of the stablecoin market, where we basically had a monopoly. Now look at it today, we're sort of a duopoly, with most of the stablecoin issuance being around USDT, USDC kind of following there. And then you have a very steep break on other players. But that's definitely changing, right? Before we didn't have these players. Now we're seeing kind of the influx of new players, at least in the issuance space, which is where you guys are basically playing. So what changes in this kind of market, stablecoin issuer landscape, and what was kind of the differentiator of seeing more people trying to enter the space and get some market share back from the incumbents?
Yeah, it's a great question. Think that it's kind of like historically it's been what you outlined, where with DeFi summer there was kind of like DAI and USDC that took off, and then right after that Binance USD, which has since then stopped operating. But we kind of like saw a lot of kind of a massive growth. Essentially, I think it was in the realm of like $30 billion, shooting up like very quickly past $30 billion of total market cap for stablecoins with the demand for DeFi, really, and then that kind of got fueled with NFTs. And I think that is really just activity, right? There is trading activity. There is people who want to just do things on chain, and in order to do things, they want to pay for these things. And so this is where kind of like all the stablecoin was coming. But I think that for the longest time, it really stayed kind of purely on-chain, more decentralized use cases with like DEXs and perps with DYDX and then NFT marketplaces. But we're starting to see now a tremendous amount of demand for stablecoins on assets that may or may not be on-chain, right? For payments of goods and services, for traditional companies, very large enterprises. We speak to some of the largest, if not the largest, kind of consumer tech companies in the world, and all of them are very excited about the ability to leverage stablecoins because for them, especially with the current regulation, if there's a way for them to treat that as cash or cash equivalent on the balance sheet and then use that as a form of just legal tender and cash, then it is very easy from a tax standpoint, and they can collect the money globally very easily, right? If you think about these companies, they actually get paid to offer services and sell goods. They collect this money and then they have to move it around globally, right? And while this money is moving, they're not capturing yield. They're not capturing interest that actually compounds, that should be compounding over time. And so for them, having the ability to receive this money in a way that is safe and then move it around globally without having to choose between yield and liquidity, you have both really with stablecoins, is really a game changer. That really gives these companies that are not necessarily banks the economics of being a bank without having to be licensed as such by partnering with companies that enable the issuance of the stablecoin. So it's a pretty unique form that, you would have to kind of like have a strong banking partnership on the fiat side and then kind of like FBO plus sweep accounts and then manage a bunch of, and, take kind of like a lot of hits on conversions globally. On the stablecoin side, it's really instant. So long as you can incentivize people to pay with your financial instrument, to hold balances in your financial instrument behind the scenes, you actually are capturing a tremendous amount of yield and revenue on that. So it really is like all these companies having the ability to have the upside of being a bank without a lot of the overhead from a regulatory standpoint. And the regulatory clarity is coming. So that's kind of everything is coming all together at the same time, I feel like, for the industry.
Yeah, that resonates a lot with my way of thinking about DeFi. 'Cause one of the ways that I define the biggest unlocks of DeFi is that it really lowered the barriers to financial innovation. If you look at financial innovation previous to DeFi, probably the latest instrument that we innovated one was the options as an instrument back in the late 80s. And since DeFi, we've created a whole bunch of new financial instruments, financial primitives. A lot of them don't work, but a lot of them are going to stick around, like perpetuals, option vaults. Everything you've mentioned around stablecoins are literally new forms of money, new financial instruments that we are creating. So I think that has huge potential. Nico, bringing us back now to the end user and kind of some boots in the ground in one of the most bustling places in the world in terms of stablecoin adoption. What use cases are you seeing? And also give us sort of how those use cases have evolved, because I know that Argentina as a country, as an economy, is going currently through a lot of changes politically and economically. And how has that affected the use cases of stablecoins in Argentina?
Okay. So, well, yeah, in the last year or so, maybe 2 years, the economy in Argentina mostly changed a lot, and there are a lot of different economic changes that are affecting how people is saving, spending, and making changes in their daily lives. But I think that the saving in USDT or USDC or mostly any stablecoin is still a thing. People is still saving in stablecoins rather than fiat currencies. Maybe now that you have less than a hurry than before to go into stablecoins because inflation is not that bad, but it's still a thing. As I said before, there is a lot of people that is earning a salary, maybe not in a totally legal market, or also earning a salary outside the country, like a freelancer or something like that. So a way to spending their money, their salary through stablecoins, it's a great way to just do your regular daily purchases in different commerces. So that's another way to where the adoption is happening and where stablecoins are really useful. And also based on the economic changes in the years before, there was a lot of people that moved to other countries from Argentina, trying to flee away from the inflation, from different conditions in the country. And I think remittances is something that is also happening a lot. There is a lot of people in, for example, Spain, and they are using stablecoins in order to move money from or into Argentina, because it's a really easier way. And as you know, in Argentina, we have like, it's what is called a cepo, that is basically you won't be able to access like the foreign markets to send money outside the country in an easy way. So sending money through stablecoins was a really useful way to just send money abroad if you need, or to use money if you go on a trip or something like that. So there is both sides. One is for the survival of the user, like against inflation and in order to join the financial services, and also there is another aspect that is the real world use case, daily based use case to purchase something or to pay a commerce or to just have an account somewhere with your money. So I think that it's kind of different from or the experience that maybe you're seeing in other places, because here is like we have different conditions in the market, but yeah, it's what it drives the real adoption and why this place is one of the higher in adoption in the crypto space. Yeah.
And everything you mentioned, right? Unfortunately for humanity, like these things are not going to change, and we're actually seeing how other countries with similar economic factors, like the one you mentioned, which bad monetary policy, bad use of public funds, authoritarian government, et cetera, are also being replicated in other countries. And we're seeing it in Bolivia actually happening in real time, Nigeria, Turkey, and other countries. The only difference, this is the upside for us working in this industry, is that now we have the tools to actually provide solutions for citizens in these countries. Whereas before, they just didn't have an out, right? They just didn't have a way to access these new tools. So that's what I feel it's fascinating about Argentina. It really has showed a test bed for what stablecoins can achieve for humanity. So we talked about like what's enabling it. Now let's talk about like what's actually blocking it. Like what do we have to change for it to actually continue to expand in adoption? And I'll give you two numbers before I'll let you answer. One I already mentioned, which is kind of the eye-opening number, the optimistic number, which is $30 trillion in process volumes for stablecoins, and it surpasses Mastercard and Visa combined. I think that's a huge milestone for the Web3 ecosystem and for stablecoins as a whole. But then there's this other number that kind of brings us back to reality, and basically, yeah, those of where we actually are, which is $250 billion in total stablecoin market cap, is just 1% of the total monetary supply. So that just points about the amount of room for growth that there is for more stablecoin issuance. So we can start with you, Mark. Where do you think where do you think are the bottlenecks right now for us to actually get to 5-10% of penetration of the monetary supply?
Yeah, I think when people sort of look at maybe new products and they're going to launch and go to market, they have to think about things like custody, liquidity, networks that they're going to operate on, And so you sort of end up with a full stack of things that you've got to think about in terms of like launching a new product. I mean, we spend a lot of our time just extracting those complexities away for our customers. So, they don't need to think about what chain to move assets on. They don't need to think about how custody infrastructure is being put together. They've got one partner with APIs or SDKs to make that happen. But I think that's like, a problem that we've very much solved on our side. It's like, what's the next step beyond that? How do you then, build more adoption from there? And I think, one is truly like interoperability is massively important. It should move from, it's not going to move to 5 or 10% if I want to send you USDC right now and I have to ask you what chain you're on. That's not a sort of, that's not like an account to account system. It's more like wallet to wallet. And I think we got to move into that sort of structure where you don't need to think about that type of underlying tech. You can pretty much just forget about it and just send transactions person to person. I think that's a big thing that we've got to really work on. And when it comes to sort of the growth factors or ways that we can, increase adoption at incredible rates, I think you have to also think about who are the main players today that have these massive networks of customers that we can leverage. And so, you mentioned, the stats of stablecoins versus Visa, MasterCard transaction volume. I mean, they've got billions of customers globally that are that have credentials that are active, and I think about bringing those sort of networks together is like a way that you start to actually have massive adoption at scale. And so I think once we solve a few more of these problems around like account to account versus wallet to wallet, I think there you can really sort of unlock a lot of that growth that is just sitting there waiting to get active.
Awesome. Thanks, Mark. Nass, what about from your side? What do you think are the bottlenecks right now?
Yeah, I think that there are three. The first one was definitely on the regulatory side, I would say. Like, this is obviously Genius is making a lot of progress. It's still TBD on what the final thing is going to look like, but hopefully we get a final decision made between either like this upcoming August or early next year. I think that has been a very big point of, I would just say, risk, essentially, that large enterprises and institutions want to manage, both US-based and non-US based, that want to enter the US market, which is critical for the majority of companies on Earth. Definitely, kind of like regulatory side. And obviously working with companies, which we try to do, is really providing the kind of a future proofing for these upcoming regulations and regulatory frameworks to make sure that we manage as much risk as possible for large enterprises, so that they can just focus on issuing the stablecoin, integrating stablecoins across their entire ecosystems, internal operations, etc. The second part, I would say, is really just hiding complexity away at really just internet scale within modern internet grade experiences. So today, if you have a balance, for example, at Venmo, you don't know actually like what's backing this balance, right? Whether it's cash, T-bills, money market funds, if it's held at a bank with like mortgage-backed securities, like you just don't know. You just know that you have $1 and that it's available for use essentially anywhere. I think that stablecoins need to to reach the exact same model where they need to be integrated as part of balance systems, wallets, and payment systems, payroll, and so on, in a way that is totally equivalent with traditional cash today. So that I'm very excited about, and banks are doing work to support. Visa and MasterCard are doing a lot of work to enable large payment networks to make money kind of like interchangeable between fiat and stablecoin, both on the way in and on the way out. And then finally, I think just connecting to more incentives. I think that the driving adoption of a new financial instrument comes with incentives. What are the incentives? Can I get more interest for my customers? Can I get bigger margins as a business by selling my products? Can I actually expand the set of products that I can sell to my customers just by leveraging the composability of stablecoins? I think that this is going to be pretty important, not just to enable things like trading, lending, and so on, but really just connectivity with a lot of the infrastructure that is built online. And so I'm very, very excited about the composability, increasing the set of tools that are being built on top of stablecoins. We saw recently Shopify and Coinbase coming together to really just push for new stablecoin payment protocols over HTTP. Those are things that are very important for merchants to be able to get paid worldwide, and really building the incentive for those guys as they get yield associated to that and more composability. So yeah, I think that this is probably kind of like the three things that I would say are bottlenecks and that we need to tackle as an industry.
Gotcha. Before we go to Nico, Ripio, you both, Mark and Nass, mentioned regulatory and basically UX. On the regulatory front, do you guys think we're past the point of no return? Like it's just upside from here? Or do you think we're still going to be sensitive to just presidential cycles and maybe the next president just say like, yeah, let's scrap all these bills. We're going back to just tightly regulating this thing? Or do you think we're out of the woods?
As I was going to say, John.
Yeah. It's interesting. So I would start by saying that it's been pretty clear to everyone who wants to run for some office that people do care about digital assets and they care about stablecoins, right? And so there is not only a lot of interest from the constituents and people who have the voting power, but also from the deeper pockets, institutional deeper pockets, that want to be able to access those digital assets and that want to offer financial services associated to those digital assets. So you kind of like have the right recipe for you kind of have the voting power and the voice of the people, so to say, as well as the wallets that can speak very loudly on those issues. So I think that the incentives moving forward for politicians and anyone running for office, anyone joining kind of like a regulatory agency that is going to have to work with some government, either state or federally, is going to have, I would say, a certain amount of incentives to make sure that there is innovation in the space and that there is safe innovation and that there is adoption, which I'm very excited about. So the incentives are there. The one thing that I would say is that there's been a lot of work that has been done at the state level, and Zero Hash has done a lot of work there. Bastion has done a lot of work there on getting a lot of the licensing done and chasing kind of the regulatory licensing at the state level. And now I feel like this is the right moment where there's been enough maturity and enough battle testing at the state level to finally move those things federally, right? For example, New York and the New York Department of Financial Services have been doing a tremendous amount of job, both of work on the custody side and digital asset services, issuance, etc. And now it feels like the Genius Act is pretty much moving state level New York kind of guidance to federal legislation. And so I also do feel like it's more incremental than it's ever been before. Whereas before it really looked like having to jump into the unknown. Now it feels like PYUSD has been issued by PayPal for a long period of time, and others have been issuing their stablecoin, and things work, and we know what is safe, what is not. And so it really feels like we understand essentially what is going to enable innovation in a way that is safe for the US. But yeah, we just need to get it passed at the federal level. Otherwise, we're just going to be playing ping pong and for the next few administrations.
Yeah, that's a very good point. Because political cycles they come and go, but these two things that you mentioned, which is constituents and more deep-pocketed interests, kind of going in this direction of wanting to get involved, I think that's more like of a secular trend rather than a political trend. So I think that's a tailwind at least for us. Mark, anything you want to add there in the regulatory front?
Yeah, I mean, I think on our side, it's as Nass mentioned, it's about working with a range of state regulators on our side, sort of from both ends, I would say, and you get different sort of controls at a different state level, and so regardless, I suppose, of where this market moves left or right in upcoming administrations, I think what's always served us all well is just true engagement. And so one of the big changes that we would have noticed even in the last election cycle just was the overwhelming sort of voice that this space had when it came to getting, I would say, attention on the right issues that we needed to be focused on for stablecoin regulation and crypto regulation more broadly. And so I think that's something that even future administrations aren't going to ignore. So I think it's definitely going to serve us well as we think about the growth of this space. And just, honestly, what you're seeing in terms of the names and brands that are entering this space as well, it sort of becomes a bit of a too big to ignore type of situation for these different administrations.
Hey, and everything you two just mentioned basically, I feel, results in a de-risking of the space. There was like a huge risk premium that people outside were seeing as, I mean, this is interesting as an experiment, whatever, but the regulatory risk, reputational risk is way too high for us to do something meaningful. And all these tailwinds have basically de-risked the space. And as a result, as you mentioned, Mark, initially, like the velocity of new players entering the space is basically increasing. It just has this snowball effect.
Yeah,
let's go back to. Go ahead.
Oh, I just wanted to point, like, we've seen that on the Libra project, what it looks like when there is no regulatory clarity, and that you can actually receive quite a few different forms of pressure on your business, both as Meta/Facebook trying to launch it, but also as a participant of an upcoming consortium, right? And so there are really a lot of different levers that regulators and different agencies have on companies to really incentivize them not to participate into a given activity. And so I think that it's not just about the regulation, it's also trying to kind of like shut down those different levers. And I think that we're seeing the OCC and others, FDIC and others, like doing a lot of work to remove those avenues for very arbitrary judgment, essentially, and arbitrary pressure paths.
Gotcha. All right, we kind of went a bit on a tangent, the regulatory tangent, but we all know it's a big topic when it comes to stablecoins. Bring us back to Bottlenecks. Nico from Ripio, one of the most influential companies in the region. Not only a centralized exchange, but you have a range of other products. You're working on LATAM, this chain with other partners in the region. Like, what do you see as the main bottleneck in the region for increased stablecoin adoption?
So the regulatory thing is the thing, but I think that it's moving forward here because people is using the technology already. So if you are not just making the regulatory steps in order to move forward and start seeing what's going on, people is going to keep using it anyway. So that is already happening in different aspects, different centralized or decentralized exchanges. I think there is like an access and infrastructure gaps here in the region, in LATAM mostly. We don't have like good or reliable on-ramps all the time for most countries. And also people doesn't have like the latest technology always at hand. Like, I don't know, most people doesn't have a cell phone or smartphone with NFC that doesn't allow them to pay like with contactless, like in other places, or wallet integrations, something like that. So, for example, the physical card here is still a big thing, mostly in Argentina, because the technology is not like, if you go to the United States and you take out the card, it's like kind of weird now. Most people pay with their phone. But in Argentina, it's like the normal thing to use a physical card. And it's moving forward, but still like we have those infrastructure and technology gaps. And also the UX and education from the user. I think that still the market and the technology is not like smooth as it should be. Most users, the newest users in the market are not thinking about chains or fees or gas fees, or if it's a custodial or non-custodial model, things like that they want to just use the technology because they need to access it and they need to pay something or save money or whatever. So I think we have to move forward into making it like as smooth or invisible as possible. in order for the user and all the users to be able to use the technology in a full way. So I think that's the three key things: the regulatory, because we need it, but also the infrastructure, the access, and the UX plus education from the user. Yeah.
Got it. Thanks, Nico. Going back to the bottlenecks, and we double clicked on regulation. We haven't double clicked on UX. I feel in the last cycle there was probably an overinvestment in infrastructure, and a lot of this infrastructure was pointing to interoperability infrastructure, like how to abstract away all these different systems, all these different gas tokens, consensus systems, et cetera, et cetera. Mark, you mentioned it as one of the bottlenecks to further adoption. We've seen players in the space like Stripe going in a shopping spree, acquiring Bridge XYZ, acquiring Privy just recently, both things that touch on the bottleneck that you just mentioned. Um, do you see a light at the end of the tunnel from the space just generally? And from the zero hash perspective, are there ways in which you're working on to continue abstracting these complexities to your customers?
Yeah, absolutely. I think one of the new product launches that we had on our side is just to launch Zero Hash Connect, which is readily easily embeddable SDKs that you can use to launch different range of products, from pay to fund to payouts. One of the first clients that actually launched on this was Kalshi in the US. So they let their users fund with stablecoins and now crypto as well, for pay-ins and payouts to their platform. And they were able to do that within 2 weeks, from first conversation to go live. And so I think just more products like that are super helpful, where we're able to go at a best-in-class user experience from day one with these customers, really leverage, I guess, our knowledge and product set to enable that. And then from there, launch more products that just abstract that user complexity when it comes to connecting a wallet and ultimately moving value between different participants. So I think it's going to take probably another step change on that front for platforms to engage more with SDKs and just have more of a standardized user experience that really will unlock more and more in terms of adoption. Because giving people the options, and I always think about, maybe it's overused a bit, but how would my mom or dad use this here? I think with the way currently a lot of platforms are set up, it just doesn't work. I think we just need to sort of standardize a few more things on that front to actually make it just much easier for mass adoption to happen on that level.
Gotcha. Nass, same question for you, but more from the stablecoin issuer front. Like before, you would see stablecoins being issued on certain chains and them kind of wearing the jersey of that chain. Like Dai was wearing the jersey of Ethereum, and it still kind of is. You also had like Solana stablecoins, et cetera, et cetera. Now you're kind of seeing like stablecoins issuers knowing that they have to be everywhere for them to actually reach all the users. How are you seeing it from your front? Like how is that an issue, and how is it being solved now?
Yeah, I think that it's about enabling in a seamless way large institutions, enterprises that already have the distribution. So first and foremost, like what does success look like for a stablecoin that is issued? That's distribution and liquidity, right? Like those are kind of like the two main variables that you need to be tracking, and the KPIs that you need to be tracking. It's less about supply. It's less of, there are kind of like a lot of availability across chains, etc. It's really liquidity, distribution. That's what you should be optimizing for. And obviously adding support for more chains may increase the distribution, but fragment the liquidity. So it's always kind of like a very important balance that these issuers need to think about, and we help them reason through. So I think that typically starting smaller, making sure that there is concentrated liquidity that enable not just on-ramping, off-ramping conversion between any two form of currencies, but you need to do that often to make sure that you tap into the liquidity that might already have been built with other stablecoins, right? So it's, in some cases, USDT has the best conversion rates with a given local currency in some emerging markets. In some cases, that might be USDC. And so making sure that you have the ability to convert in and out of your stablecoin to get as much of the yield as possible on it and as much of the benefits on your ecosystem, but also converting to the asset that may have just like the best spendability behind the scenes completely transparently is very important. So I would say that making tools that building the tools that make it incredibly easy to issue the stablecoin, understand what are the areas of growth really for the network, and then also building the systems. And this is why we also do a lot on the custody side. Is you need a place for those assets to be held, but you need to also intelligently understand when is the right time to convert in and out of the stablecoin, right? To convert, maybe fiat is going to be the best path to settle via specific or to a specific jurisdiction. In some cases, you might want to hop through USDC or USDT because those are going to be the most liquid markets. And so it looks like custody, but that has a little bit of FX to it, right? Kind of like a FX and smart routing to it to make sure that you're always getting as much yield as possible and you're always increasing the spendability and reducing the transaction fees, right? So those are the things I think that we're really focused on. The UX, in my opinion, is a solved problem. At the just creating a wallet for someone, enabling them to transact, that's a solved problem. I think that we all have realized that there are over 100 wallet companies in the world that tackle that. What is next is really just increasing the spendability of those assets, increasing the set of financial services, kind of like the crypto mule, right? Where you have kind of like the it looks like Web2 in the front, but it's Web3 in the back. I think that it's really important to just increase to increase essentially the adoption of those services. Yeah, hopefully that answers the question.
It does. It does. We're getting close to the top of the hour. Before taking some questions from the audience, I want to give you guys a chance to maybe hint to a future feature, product launch, whatever it is from your respective companies. So maybe Nico, we can start with you. Anything you want to mention about Ripio coming to the future?
Yeah, sure. So we are working on different things, trying to, as I said, making the access and the overall experience to use stable coins and crypto the easiest way possible to the user and to make it the less complicated as possible as well. So we are working on different tools. We are working on a crypto card that will be able to spend money in like payments, in different payments with stablecoins. So in a way to expand our capabilities with a crypto card, right now you have to pay whatever you buy, you have to pay one time the full amount. So we are working on a way to just split the payments between a period of time to make people be able to afford bigger purchases with less money, and to split that amount across the time. So that is a big thing because here in Argentina, we are very like used to pay in that kind of system with like regular bank cards, but in crypto it's not that common to pay in terms. So we're working on that, trying to push that adoption into the market. I think it's going to be like something really different to what we are seeing in the market, at least on the local market. So we're working on that. We are also offering like what is called KPI, that is a decentralized exchange to provide DeFi to the users and some specific API in order to invest their money and earn some money every day, so they can just push forward their like what the money they have in their account every day, and to earn some money with what they save in crypto. So that's another thing we are pushing. And overall, the main focus that we have in Ripio, apart from specific use cases, is to just make the UX easier, to make the adoption easier for users, and trying to reach everyone that wants to use the crypto, the stable coins in order for their daily lives in an easier way. If we can make people from all ages to use crypto as easy as a crypto native user, then we are doing the right thing here, and that's what we are pushing for. Yeah.
Awesome, Nico. Thanks for sharing. Mark, over to you. What can we expect from Zero Hash?
Well, yeah, I spend most of my time working with net new clients that are coming in. So a lot of good announcements on our front to come up, which I'm really excited by. And again, it sort of builds upon major platforms that are moving into this space that are looking for trusted partners to work with. So that's, I guess, one of the key things. On top of that, too, we are expanding like the SDKs that we are offering, and so we've got some major announcements coming there as well from new customers to functionality too. So probably those 2 points would be a thing to keep an eye on.
Awesome. Thanks, Mark. What about you, Nass?
Yeah, a lot of extremely high impact, I would say, partnership announcements coming up, TBD on the timelines, but hopefully some of those things, including stablecoin issuance for several companies and build out of crypto products within their ecosystems for some of the largest companies in the world are coming up. So very, very excited for that. Just those things take time to obviously kind of get to a place where you can announce them. So very excited for that. And yeah, I'm honestly just waiting for not our own announcement, but for the Genius Act really announcement of August, crossing all my fingers. So not just focus on passion, really.
Nice. Well, awesome, guys. We can definitely leave it here. There were a lot of very interesting insights. I think overall conclusions, there's a lot of tailwinds hitting the stablecoin sector. And overall, we're going to see an increase of use cases, more expansion in terms of geographies, better UX, hopefully more regulatory clarity, and hopefully that helps the increase in issuance, more players entering the space, and just overall more benefit from crypto to the world. So again, guys, thank you very much for joining us. Thank you for the audience that was here all the way, and we'll see you on the next Decentralized Mic.
Thanks so much, everyone.
Thanks, Nico.
Bye-bye.
All the best.